Now, before we meet tonight's special guest, let's look at one of the most spectacular, and to many supposed experts, surprising business stories of the generation. The remarkable comeback of American manufacturing. As a nation whose attention was supposed to be permanently diverted elsewhere, instead got successfully back to basics. In 1939, when the Commerce Department started basic industry companies, and how long is this remarkable comeback likely to continue? With me tonight are the three analysts currently rated tops in each of these industries. Michelle Applebaum of Solomon Brothers has not only led all steel analysts on Institutional Investors All-Star team for the past 6 years, but she was rated one of the top 10 stock pickers in any category last year. Dr. William
happening in the steel industry over the last 2 years is something that's fundamental and secular in nature, and is for real, as you ask.
When you say it's secular, you mean it's not divine?
No, that's right. It's not anything but divine.
But it's long term.
But it's long term.
Bill Young?
If I could create a headline for the chemical
competitive steel industry in the world. Our costs have come down on average 25% in a dollar-to-dollar basis, and the drop of the dollar from a peak of about 250 yen in '85 to 100 yen currently has helped make these companies among the most competitive in the world.
Can the U.S. steel industry survive if the dollar improves in strength?
I think the dollar has a long way to go up before it would have much of an impact on the steel industry. The impact of the dollar is long-lived kind of impact, and so that I don't think that the competitiveness of the industry fully reflects today's currency levels.
As we've just seen, even in the remarkable comeback of what used to be called smokestack industries, now that's against the EPA to say that, steel has led the way. Does that mean that it is too late for people to be buying steel stocks? Absolutely not.
Steel stock valuations, I think, are among the most attractive. Steel stock valuations today are the lowest that they've been at in any other recovery cycles. The stocks are selling at 2/3 off the market multiple on peak earnings. Historically, they sold anywhere from 1/3 to 50% off the market multiple. So I think there's significant upside in virtually every company in the sector.
So you'd buy them all, or do you have some favorites?
Buy ratings on them all. I have some favorites. I think among the integrated producers in alphabetical order, Bethlehem, Inland, and LTV are my three top picks. All three companies epitomize change for different reasons.
And you listed them alphabetically because you really don't have a preference?
I really don't have a preference if I had to name one.
Is there any part of the steel industry that people should not be investing in your judgment?
I think there's less opportunity in the mini mills. Those were the wonder stocks of the 70s and the 80s, and the growth was tremendous, but the mini mills dominate the market that they're in now, and they've kicked the integrateds out of certain product lines, and they're now competing with each other. They're also under significant cost pressure because their principal raw material is scrap, and scrap prices have nearly doubled in the last 2 years.
The steel industry for generations was thought of as having arrogant executives and uncooperative unions. Has any of that changed?
There's a new generation in the industry, both on the labor side and on the management side.
And you think that this is Can it be true for a generation that this is not just a play of cyclical stocks that you buy them in a brief period and sell them later on?
No, I think there's something longer term happening. If you look at the downturn from 82 to 87, the 5-year downturn was part of a secular decline that really began in 1959. And I think over the next 5 years, you'll see a mirror image as not only steel, but steel's markets have become so much more competitive.
We have a panelist who I won't identify out of kindness, who once said to me, "I don't like the steel stocks. I will never like the steel stocks." Was that thinking what made these values possible?
I think that the resistance that people had to steel stocks made some of these valuations that have turned out so well.
Bill, chemical industry had an image problem of its own.
(1981). If you look at steel compared to some of the markets it serves, most notably automotive, which is the single largest market for steel, automotive prices since 1981 are up well over 65%. So that if you look at steel versus its markets, it's still, even after recovering some 15% off the trough, has underperformed rather dramatically both general inflation and markets that it serves. So I would expect steel prices to continue to rise, and they seem to be rising more dramatically than they have any time since 1974.
Dramatic enough to push up the price of cars significantly?
Well, today, the average component of steel in the cost of a car is half of what it was at the start of the last decade because of this differential, so that there's an estimate that some auto steel prices are going up 10% next year. Our auto analysts has determined that that would mean $50 per car, which isn't a significant part of the car anymore. Steel's not as large a cost component in any of its markets as it once was. So I'm not certain that there's general inflationary implications today the way there would have been 35 years ago with steel prices rising.
Bill, how about chemical prices? Back next week. Then we're going to see if it's possible to get to the head of the panel.
is a production of